Coming up on Business Incorporated today, Akinwumi Adesina sworn in as the president of the African Development Bank. And Kenya's inflation remains unchanged at 4.36% year-on-year in August. Egypt signs $2 billion loan with regional international banks to finance state budgets. Hello and welcome to the program Business Incorporated. I'm Temple Ashaju. The president of the African Development Bank, Mr. Akinwumi Adesina, has been sworn in as the head of the multilateral financial institution for a second 5-year term. While giving his acceptance speech, Mr. Adesina says the AFDB will expand stronger and foster inclusive partnerships across Africa. And the swearing-in ceremony, which was held virtually, follows the successful re-election on Friday last week after getting 100% votes of all regional and non-regional members of the bank.
We will expand partnerships, financial partnerships, knowledge partnerships, and investment partnerships. Stronger inclusive partnerships with civil society, academia, and knowledge centers of excellence. We will reach out and tilt more global capital towards Africa, joining investment hands across the globe to support the needs of the continent. The bank will leverage its brand, its knowledge, and resources to help do more and better for Africa. We will deepen the Africa Investment Forum and make it a critical driver for these bold investment partnerships to help move Africa faster forward.
And now let's get some market numbers, which were mostly positive at intraday. South Africa's JSE surged the most by 1.64%, while Nigeria's main index rose 0.25%, led by the banking and consumer goods sectors. Only the EGX30 in Egypt was negative by 0.73%. And in Kenya, it closed positive on Monday. And major markets that we track in the Gulf region were all in the positive territory as well. In the UAE, Dubai's main index posted the strongest gain of 0.32%, while Abu Dhabi's index added 0.13%. Elsewhere in the region, Saudi Arabia's index was up by 0.21%, while the Qatari index added 0.06%. And European markets opened higher today after the latest data from China showed manufacturing activity in the world's second largest economy expanded at its fastest rate in nearly 10 years. Let's bring in Chelsea Delany, my colleague at Frankfurt, to tell us more, of course, from the European scene. Chelsea, thank you for joining us on the program. So, Germany today issued new economic forecasts for the year, and it said it now expects the country's recession to be less steep than before. How did traders react to that?
Well, it's certainly good news for investors, for economists here in Europe. The economy ministry, in releasing this forecast, was very optimistic in how they're looking at the German economy, which of course is the largest economy in Europe. It's very important for the broader Eurozone. So they now do expect the economy to shrink about 5.8% this year. They had previously expected a contraction of 6.3%. So that is a fairly significant improvement in the outlook for Germany. They're looking at things like manufacturing activity, service sector activity, and that's all really improved quite a lot over the past several months since May. but they are still looking, they still do have, of course, concerns. And what we heard from the economy minister today is that the major concern is really what happens with the global economy. So even as the economy here in Germany is stabilizing, there's still a whole raft of concerns about the global economy, and many countries have not fared as well in either controlling the virus or in stemming the economic damage. So all of that would certainly feed into further trouble down the line for the German economy.
And Germany's Kiel Institute for the World Economy says global trade is recovering much faster from the coronavirus when compared to the 2008 financial crisis. But how sustainable is this sharp rebound in trade?
It's really maybe too early to say how sustainable it is. It is quite dramatic, and what they basically have seen is that trade activity has basically snapped right back to where it was before the crisis. So they looked at things like shipping activity, activity at ports, transportation, and all of that in August is basically at the level that it would be in any normal August. So that is certainly a promising sign for economies around the world that trade has picked up so quickly. But of course, as we heard from the German economy ministry today, there are still many uncertainties that the global economy is facing, particularly over the potential second wave of viruses in the fall. So that is a potential constraint on this recovery we've seen in trade so far this year.
Lending from your phrase there, as it looks promising, it gives a glimpse of hope a lot for traders and, of course, economic actors at large. Well, as the EU faces a surge in coronavirus infections linked to the restart of travel, we understand that member states are going to be discussing this week on how to make that better and contain the virus. Well, what changes are we likely to have from that meeting?
So EU ambassadors will be meeting in Brussels tomorrow, and one of the major things that they're going to be discussing is, of course, how to better coordinate these policies across the EU. So whenever the EU began to introduce lockdowns and travel restrictions, it was very disjointed and quite confusing. Every country had a different strategy, and once they restarted travel in the summer, it's kind of been the same. You have every country has a different list of risky areas. Every country has a different testing strategy. Every country has a different quarantine strategy, and this creates a lot of confusion for people traveling throughout the Eurozone. So they would like to find a way to make these policies a little more cohesive. That is a bit of a problem because as Eurozone members, as EU members, they each have the authority to decide these measures themselves. But for basically everyone, they say it's really important that there is a more cohesive strategy, because right now the strategy is clearly not working as well as it should be, as we have seen these cases pick back up. So there's certainly a lot of pressure on these ambassadors and on these authorities to find a better solution going forward.
Thank you so much for your time on the show. So let's head down to London now, where manufacturing output rose at the fastest pace in 6 years, as Purchasing Managers Index across the UK reported that output and, of course, the new orders rose at solid and accelerated rates. My colleague Juliana Olainka is standing by to tell us more. Juliana, good afternoon.
Good afternoon, Temple.
Great. So the United Kingdom manufacturing PMI, of course, has come in at 55.2 reading. That's for the month of August, compared to 53.3 in the month of July. But this hasn't really prevented manufacturing companies from downsizing. Any idea why we have that?
You're right, Temple. I think the elephant in the room is, of course, these significant job losses. But, of course, we still have to look at the positive side of this PMI manufacturing data. It does show that factories are increasing their output. I think a lot of economists are putting this down to demand domestically, and exports have increased to places like North America, Asia, and across swathes of Europe. But whether or not this is a recovery or a rebalancing is up for question. expansion, because although we've seen a month-on-month increase that we haven't seen for 6 years, we are also seeing consecutively, in fact, for the 7th month in a row, jobs going, whether you're a small firm, a medium firm, or a large-sized firm. A lot of company bosses now are really trying to reduce the number of people that are working within their factories. And this, of course, lies the problem, even though we are seeing major PMI figures of 50, anything above 50 shows an expansion. If you think of how low it went during the lockdown, I believe in April it was as low as like 13, which is record breaking. These numbers are consistent and they should show growth, particularly as, of course, lockdown has eased. And I believe some of the major concerns as we creep into the last quarter of 2020 is if this rise is sustainable. Is it just a flash in a pan just because lockdown has eased, or are these measurable numbers? And I don't think economists are convinced as of yet that this rise is sustainable.
PMI numbers, a major indicator across the world, and we do hope that some of the markets, frontier or in emerging markets, will be able to toe that path as well. But Juliana, we know that Apple is now worth more than every company in the FTSE 100, and that's after rallying yesterday. But how are markets reacting to that, and what's the rally like?
Got to tell you, here in the UK, traders don't appear to have batted an eyelid on that pretty eye-watering figure there of Apple's valuation. So Apple is now worth £1.65 trillion. All of the other 99 firms on the FTSE 100 are worth £1.63 trillion. Combined. Has that affected the FTSE? Not really. We started off early trading in the red. We're still there at intraday after the long bank holiday weekend. The all-share is down 1.20%. The FTSE 100 is down 1.26%, and the FTSE 250 is down 1.06%. On the currencies market, the British pound is up on the US dollar by 0.55%, up on the euro by 0.35%, and up on the Japanese yen at intraday by 0.76%.
Okay, Juliana, before I let you go, we know that companies using the government's coronavirus follow-up scheme are now having to contribute to workers' wages. How is follow-up changing now, and is that more like a plus to a lot of the workers?
Well, it depends on whether or not you're guaranteed your job, and I think there are millions of individuals up and down the length and breadth of Britain who are not sure about that. About 9 million people have been taking advantage of the government's furlough scheme, or as it's officially known, the coronavirus job retention scheme. It started off in March, and the government were paying people to basically stay at home, up to 80% of their wages, capped at £2,500. That was extended in August, and the government were paying 70%. But now, as the government are starting to wind down the scheme, it will come to an end at the end of October, so at the end of next month. They're now asking employers to take more responsibility. So the government are from today going to be paying 70%, and they want employers to top up their employees' salary by 10%, so they will still be receiving that 80%. Also, as well, the government want employers to pay national insurance contributions as well as pension contributions. They weren't doing this before the government were paying this. So now we're really going to see whether or not these redundancies that we've seen, I believe about 800,000 people have lost their jobs in Britain since the start of the pandemic, whether or not it will be an increase. We are expecting it. I believe unemployment lies at about 4% in Britain. It's likely to rise to about 7%. That's a conservative estimate. Some are suggesting it could rise by up to 15%. So when we get the figures from today and whether or not people have been cutting their losses, only time will tell.
800,000 job loss. That's huge, Juliana. Juliana Olayinka, my colleague, thank you so much for your time on the show.
Thank you, Temple.
Right, and after the break, we'll talk more about commodities. Stay with us. Right, welcome back to the program. This is Business Incorporated once again. Well, Kenya's inflation rate was unchanged at 4.36% year-on-year in August from a month earlier. And of course, data from Kenya National Bureau of Statistics shows that on a monthly basis, inflation was 0.20% from 0.08% in July. Now, Egypt has signed a $2 billion conventional and Islamic loan with several international and regional banks to finance the state budget and, of course, support the Egyptian economy. And, of course, in a deal coordinated by two UAE lenders, Emirates NBD Capital, and, of course, First Abu Dhabi Bank. The loan also aims to help Egypt maintain its strong path in the face of fluctuations prevailing in global markets. The first tranche of the loan is a conventional facility of $1.490 billion and the second an Islamic facility of $510 million. Now, global coal consumption dropped by nearly 5.2% in the second quarter of 2020 due to many factors, including the pandemic. And in 2018, coal was reportedly the single largest contributor to growth in emissions. Now, Nigeria has abundant proven coal reserves of about 2.86 billion metric tons, and it has also signed the Paris Climate Accord. To talk about these and more is Tobiloba Ogunpolu, research analyst at Financial Derivatives Company. Tobiloba, thank you so much for joining us on the show.
Thank you for having me.
Great. So global consumption of coal dropped in the second quarter by over 5%. What's responsible for the large decline in coal demand? And is this likely to lead to a jump in the demand for renewable energy like wind and solar and, of course, all the mix that we have available here?
Yes, so global consumption fell by about 5.2% from about 0.6% in 2018, and that was due to the impact of the pandemic on energy consumption. So we've seen that this affected several sectors. So for one, it affected electricity, that's the power sector. It affected cement production, steel production also, so amongst others. So all these sectors were affected during the pandemic, and definitely we saw a drop in coal consumption. And so due to the fact that the consumption dropped as a result of the pandemic, then we've seen that the consumption for other renewable energies such as like you said, wind and also solar dropped too. But the interesting part is that it dropped by about 2% and 3% respectively compared to the drop in coal. So coal dropped by about 5.2%, while wind dropped by about 2%, and also solar dropped by about 3%. So we've seen that a lot of people are still moving to cleaner energy such as the renewable energy, that's wind and coal, wind and also solar energy.
Okay, so coal-fired power generation accounted for about 30% of global carbon dioxide emissions. Has the significant decline in coal consumption reflected in the global gas emission level?
Yes, so in terms of direct impact, yes, we've been seeing a slowdown in emission. So, for instance, carbon emission was down by about 18% in China, and China is like the world's largest emitter of carbon dioxide. So we've seen that there was a slowdown in China, there was a slowdown in the European Union by about 9%, and several other countries too, there was a slowdown in emission, and that was due to the pandemic, like I said earlier. So we've also seen that there has been a pickup in emission as economies resume. We've seen a pickup in emission. In Nigeria, for instance, it fell by about 502 million metric ton in the first half of the year due to the lockdown restrictions and all that. In several other countries too, it fell. But right now, we've seen that as economies resume, we've seen activities increase in emission.
So we know that new environmental and, of course, SDG goals are in place. But talk to us about Nigeria, which, of course, you mentioned earlier. How is Nigeria going to be investing in coal? Because we, of course, have got a large deposit of that right here.
Yes, so yes, like you said, Nigeria has a large deposit by about 2 billion metric ton, and that's for the reserves. And Nigeria also signed an agreement, and according to the agreement, Nigeria committed to reduce its emission unconditionally by 20%. And with the help of international support, we also have a pledge to reduce by about 45%. So under this agreement, Nigeria also decided that coal technology will be phased out, and which means that new coal plants would be contrary to the agreement that Nigeria signed. So on one hand, we're trying to like harness coal and get and derive revenue from coal, and on the other hand, there's an agreement that we signed that shows that we need to like reduce our emission by about 20% So Nigeria is stuck between a rock and a hard place. So we need to actually strike a balance to see if one we go with we reduce our coal demand, and we reduce the number of coal plants just to stay in line with the agreement.
Let me ask you this on a pattern note, Toby. We've got a huge deposit of coal in our coal city known as Enugu. But talk to us about production there. How attractive is investment in the production of this coal in that part of the country, Enugu?
So in the short term, I would say it's attractive, but the fact that there are lots of people moving from the use of coal to the use of cleaner energy, such as solar, such as wind, and every other form of renewed energy rather. So we've seen a lot of people shift from use of coal rather to the use of renewed energy. So definitely the fact that there's been the fall in demand for coal, this will affect states such as Enugu that have started the production of coal. This will affect because definitely as the demand declines, definitely the price would also decline, and the revenue from that won't be as much as it used to be. So in the short term, yes, we can get investment from there, but in the long term, then this does not support investment in coal production.
Tobiloba Ogunpolu, research analyst with Financial Derivatives Company. Thank you so much for your input on the show this afternoon.
You're welcome.
Great. So let's move on now. South African power utility Escom is implementing planned blackouts today after breakdowns at a number of power stations in the last 2 days. Now, the power cuts will last from 10 a.m. GMT to 8 p.m. GMT. And according to Escom, any further deterioration generating performance may require additional load shedding at short notice. And still with South Africa, South Africa's trade balance narrowed to 37.42 billion rand in July from a revised surplus of 45.73 billion rand in June. Data from the Revenue Service shows that exports rose 6.1% on a month-on-month basis to 122.42 billion rand, while imports were up 22.1% to 85.07 billion rand. And that's the program this afternoon. Thank you for being a part of it. I'm Temple Ashaju. I'll see you next time. Bye for now.